Hello and welcome back to my channel. Today I'm going to be talking about a particular stock I personally own, and the rights issue is ongoing, and yes, I'm going to take up my rights, all of it. So the interesting thing about this particular company is that not only is the rights issue ongoing, they have also launched their public offer. So both the rights issue and the public offer is currently ongoing, although it's at different prices. So it means either you're an existing shareholder like me or a potential investor that is trying to make sense of everything. This video will walk you through all you need to make the right decision. Now, I know that many people invest based on random stock recommendation or a bit of guesswork, but truth be told that some of our investment terms can actually sound gibberish. But not to worry, this video is going to simplify everything for you. So should you take up your rights? Should you buy the public offer, or should you buy on the secondary market? Let's find out. So like I mentioned that TIP has already released its rights issue and the public offer. The rights issue is currently going for 7 naira. The public offer is at 9 naira 50 kobo, and the secondary market is at 11 naira 20 kobo. Now, as an investor, either a potential investor or an existing investor, you wonder, why do we have these different prices, and why do I have to buy at this price or at this price when it's being sold at this price? So first of all, let me give you a quick explanation of what this means, and what this means. So what exactly is a rights issue? The rights issue is simply the company giving existing shareholders the opportunity to buy more shares, usually at a discounted price. Of course, we have seen sometimes where company issue a rights issue that is above the current market price, but usually it's at a discounted price. Now the price at the market is 11 naira 20 kobo, and the company is giving those that already own these shares the opportunity to buy it at 7 naira. So that's a whooping 4 naira 20 kobo discount. But not only are they giving their existing shareholders the opportunity to buy at 7 naira, they have also given the public the opportunity to buy at 9 naira 50 kobo. So you wonder why there's a difference between the rights issue price and the public offer price. The reason is because the company is simply saying thank you to those that already own the share as at this moment. It's just a way of saying thank you, of appreciating them. Then they now give the general public another opportunity to be a part of the company if they so wish. Now, if you want to know if the initiate, that's CIP, is a solid company to own or not, just go through my previous video where I shared a bit of the analysis on why I own that stock. However, it's not a stock recommendation. But like I said, so you want to do your research before you buy into this particular company. I personally have a fraction of this company already. So let's continue. So talking about public offer, a public offer is open to everyone. Either you're an existing shareholder or you're an intending shareholder. Is open to the general public and is at this fixed price, which is 9 naira 50 kobo. And there's no requirement to already own it to take up the public offer. So either you own it or you don't own it, you can buy at 9 naira 50 kobo. So with this, it gives the first-time investors a chance to own a part of this company. And it's also a way for the company to raise additional capital. So think of it this way, that a company is opening the door to the entire market, but is giving special consideration to those who already own it. That's the difference between the rights and the public. Now, buying on the secondary market means those who have bought already on public offer before now, or those who have bought on the floor before now, who now want to trade back their shares. So they are selling at the rate of 11 naira 20 kobo as at the time I made this video. So this is what usually happens when you buy and sell on the stock exchange. Price moves daily, it can fluctuate, it can reduce, it can increase. Prices usually move daily. So with this one, you buy through your stockbroker. That's what many of us are used to. That's what we usually do, buying through your stockbroker. So that's the secondary market. So it means that you are buying from another investor that already owns the stock. Somebody like this might have bought 5 naira, 2 naira. A lot of people bought this stock when it was less than 3 naira at the beginning of the year. Now the stock is over 11 naira. So with this one, there's no expiration. You can buy at any time on the floor. But the thing is, the price you get it will differ because prices changes in the market. It could be lower and it could be higher. Now here is where the decision comes in. So either take it at this price, or this price. If you're an existing shareholder, the best thing is to take up your rights at 7 naira. But there's something called additional shares, which means that if you already own the stock, and let's say you own 100,000 units of this stock, this company did a 1 for 5, which means that for every 5 that you own, you're entitled to 1, which means that your rights issue is 20,000 units. Now, as an existing shareholder, after taking up your 20,000 units, you have the opportunity to take up additional shares. So even with this, you want to take up 1 million units, there's an opportunity to do that. The only thing is that there's no guarantee that when you apply for this, you're going to get all of this. So taking your decision now means that if the rights issue is oversubscribed, then it's going to be prorated on percentage. So the company can come up that only 50% of what has been requested for in the additional rights should be given to shareholders. Now, I'm not saying that specifically. The company decides the percentage they want to give. So if they release 50% of this, that means you'll be giving just 500 units as additional shares and your 20,000 units, which is guaranteed. So the thing with taking up additional units of shares is that it's not going to show on your dashboard immediately. It could take months. It could take 3 months, 4 months, depending on how quick the company decides to allocate the stocks to shareholders. So it could take a bit of time before these units will be given to you. And all through the period, the additional 500,000 units you want to take up, the fund for that additional 500,000 units, which is 500,000 times 7, is still going to be in their custody until the allotment has been made. Between now, November and March, which is another 4 months, if you understand the time value of money, you know that that money must have lost a bit of value. Why do I say so? Because if you put that money in the stock market now between November and December, which is usually like a discount season when you understand the Nigerian stock market, you will have used this about 3.5 million naira from your 500,000 times 7 to make a short-term gain in the first quarter. So should you buy at 7 naira and knowing fully well that if you are not given the whole 1 million additional units that you requested for, your funds is going to be returned back to you, but it will have lost a bit of value within that period. However, if you are given half of it, which is 500,000 units, you will have made 4 naira 20 kobo on each. But the remaining 500,000 units, which amounts to about 3.5 million naira, will now be refunded to you. That same amount of money could have made you something in the stock market if you invest between November and December and you use it for a short-term gain in the first quarter. So how then do you make a decision with this? So if the fund is really an idle fund, if what you are trying to get is 500,000 units, you can go in with 1 million units, but make sure that it's an idle fund so that when the money returns back to you, you have nothing to lose. But if it's the same funds that you want to use to invest in November, December period, then you might want to reconsider. So now looking at public offer, what applies to rights issue sometimes also applies to public offer, but there's more guarantee that you get public offer at 9.50 kobo if you take up your 20,000 units and take up more public offer. But if the public offer is also oversubscribed, the same thing that applies to the rights issue is also going to apply to public offer. So how then do you now make a decision? Since it's not certain that even if you apply through public offer, you're going to get all the units you want to subscribe for, what you now want to look at is if this stock is currently trading at 11 naira 20 kobo on the market and is 9 naira 50 kobo on the market, you might want to begin to watch this particular stock if it can drop to 10 naira or below, so that if you can take up some of the units at 10 naira, you know that is already certain. Then you take up your right issue and take up some more public offer. And if you don't already own this stock, that means you can't take up the right issue. But if you can watch this stock, if for any reason it drops to about 10 naira, like I did, I took more units on the floor at 10 naira, knowing fully well that I'm taking up my rights at 7 naira and I'm taking up additional public offer. But the reason I took at 10 naira is because what if I don't get all I requested for through the public offer? So this one I'm getting at 10 naira is more certain, is more guaranteed. Now don't forget that in the next 4 months, when this stock is going to be allotted to you, you won't find the stock at this price. At that time, it's possible it's trading at 14, it's possible it's trading at 13. So is there a loss? No. So I'd like to know in the comment section, will you take up additional rights using an idle fund, or you take up additional rights using a fund you know you want to use to invest because you have an extra 4 naira 20 kobo already, or you will take up some public offer and some on the secondary market? I would like to know in the comment section. And if you still have any question as touching this, please drop in the comment section and let me see how I can help out. However, the rights issue form and the public offer form is already out. In my next video, I'm going to show you how to fill the rights issue form and how to fill the public offer form. So if you want to know how to fill both the rights issue form and the public offer form, let me also know in the comment section. See you in my next video and stay blessed.